Hi, good evening, guys. How's it going? Haven't made any video for quite a few days. Today, I want to talk about macroeconomics in late July 2026 and how macroeconomics affect our life in Australia. Today I'm looking at the USD JPY. The currency pair is over 163, and I kind of heard of it. It's record high in the last 40 years. So the yen has been quite weak recently, even though the 10-year bond yield has been quite high for the Japanese yen. I think at the moment it's trading at 2.78%. That's Japanese 10-year bond yield, and I think it's about the highest in the last 20 years, something. So, yeah, the Japanese yen has been very weak, and the Japanese central bank has been artificially raise the 10-year bond yield, and as part of YCC, the techniques to save the yen, and I think they will continue to do that. The Japanese central bank will continue to use YCC, to raise the 10-year bond yield and to attract, the Japanese yen to stay at home rather than going outside. And that way there would be more money would be staying in Japan rather than investing in countries like Australia and US. They where traditionally they have higher bond yield. At the moment, the bond yield in 10-year bond yield in the US, I think is sitting at 4.7, slightly less, 4.65, around that part, around that. 4.65% of the 10-year bond yield, and in Australia it's 5.05%. Sorry. So yeah, still quite higher than the Japanese counterparts. So there are still a lot of money investing in those two countries. So a lot of yen still, investing overseas. That give us a lot of investment money on the market, in the stock market, in real estate. So yeah, Japanese yen has been providing liquidity to the market for last decades. So we rely on this money, in our society, in the Western society, to have cheap money. And they, for the Japanese, they do have a lot of investment, stake overseas. They have a lot of investment in the real estate, in the companies, in the stock market. So yeah, so we do have a lot of investment, from the Japanese, and they have those investment returns and paid in Australian dollars, or in the US that will be US dollars. So once they get paid, and then those money returned back to Japan, right? So a lot of Japanese regular household, they save money, and then they save the money, they change it to US dollar or Australian dollars, and then they will invest, right, in those two countries, maybe some UK or New Zealand, but anyway, they do have a lot of investment in overseas, and then those returns they get, they will go back to Japan at some point. So there'll be one point, the yen will be the yen value will be going high, and then the US JPY will be dropping, right? So at that point, the Japanese yen will go high in value, and that will cause a lot of Japanese assets overseas will get sold, and then those people that borrowed money from Japan, they have to pay back in Japanese yen. Therefore, they will be causing a lot of people, a lot of investors, they're gonna sell the Japanese assets, to pay back their loan back in Japan, and they will cause the yen value even higher, right? So yeah, at the moment, the carrying trade has been very, very popular. And like I said, USD JPY is sitting 163, for me, I've never heard of it, 163, definitely over my lifespan, never heard of 163 in my lifetime, so I'm just slightly less than young, yeah, than 40 years old. So yeah, 163 is really, really high, for the Japanese yen. But one of the days in the not distant future, this figure gonna reverse, right? This trend gonna reverse. The yen carry trade will reverse, right? And that will cause the assets overseas in Western societies, they will get sold, and then that will be causing market panic at some point, so like stock market, right, and the real estate market, same, the Japanese owns a lot of real estate assets in Australia, right, and especially those big holdings, and stocks, right, heaps of Japanese money in the Australian stock exchange, and US the same. So the yen definitely is really weak at the moment. As I said, the weak yen won't last forever. It will be the trend will come around. I think in the next few years. We've been calling out for many years. Some people like they think 142 is the top, but actually, I personally bought a Japanese yen at 142, and I thought, oh, that's gonna be the top. Apparently, it proves to be a big mistake in my investment. So yeah, I never thought it could go this low, 163, and then this game can be played this long. So it's definitely to my surprise. I've been holding Japanese yen for quite a few years now, and yeah, I'm kind of looking forward it to go up in value, but yeah, haven't happened yet. But no doubt, it will happen. I think in the next few years, some point, but I don't know when. But one thing that I do want to say is once this kind of yen carry trade reverse, right, that will be huge problem for the US equity market, right, and Australian equity market, including real estate. That's really, really dangerous, and because they hold Japanese hold a lot of US treasury bond. I think it's one of the highest creditor, sorry, one of the biggest holder of the US Treasury bond. So yeah, once they sell the Treasury bond and get the US dollar, and then they use the US dollar to buy Japanese yen, buy their own bond, and then there will be the Japanese yen will go even higher in value. So yeah, it really depends on when the Japanese central bank gonna do the actual work, when they're gonna sell the US bonds, and they're gonna buy back Japanese yen. But I don't think this kind of huge sellout gonna happen anytime soon. I think if they really buy back Japanese yen, that will be happening in private sectors, right? Private investors, right? Not the Japanese government, right? The Japanese government has, huge interest in the U.S. and those two governments have been working together since, World War II, right? And the central bank of of Japan, they can't just make their own decisions, if they get, if the central bank of Japan, selling out of a U.S. Treasury bond, the U.S. Federal Reserve or any other agency or Treasury, they're gonna tell Japanese central bank off, right? They're gonna have huge fallout, which Japanese definitely want to avoid. That's why one of the reasons they have to hold the U.S. Treasury bond. They will continue to hold, right? They can't, I think, the central banks definitely know how worthless, the Treasury bond is of the United States, so why they still hold it, that because they have a national interest in it, they will, they work together, they're part of a alliance, so definitely they hold the U.S. Treasury bond. Similar in China, China on the surface people talk about China is the biggest rival of the United States. Yeah, that's on the news, but in reality, those two countries, work together in some ways, in many ways actually. One of the ways, China holding, I think it's the second largest holder of the U.S. Treasury bond. So China definitely wants to have a relatively peaceful relationship with U.S. So they definitely want to continue to hold the U.S. Treasury bond instead of selling out in the market, right? And also they need their own U.S. dollar, U.S. Bond, to do their dirty money laundering sort of thing. A lot of people that have a large amount of renminbi, billions of dollars, they have to go overseas. Those money go overseas, they need the U.S. Dollars. So yeah, when they transfer the renminbi outside and to get the U.S. dollars, the central bank need to hold the U.S. dollars, right? They need to hold the U.S. asset, So in many ways, it's not, nilly-willy say, hey, I don't want to hold the U.S. Treasury bond anymore, I would just sell it, right? And change it to gold and change it to renminbi, it's not that simple, right? They need dollars, they need the dollar to maybe not buy oil, they can buy oil from Iran using renminbi, and but definitely they need dollars for their own money transferring, right? They have a lot of money need to be going out of China, right? So yeah, that's definitely one of the reasons they're holding it, and the other one is they just have to hold the U.S. Treasury as, part of the game. We kind of like a friend. We have like common interest. So China holds U.S. Treasury bond, for many political reasons. So yeah, definitely that those carrying trade, they're gonna reverse at some point, the Japanese yen, and China is similar sort of situation. China is trying to has been trying to defending its own currency, right? And in Hong Kong, the Chinese yuan offshore market, right? So they have to artificially raise the 10-year bond yield of the Chinese bond, and yeah, and try to maintain the currency peg, close around about 7, $1 to 7 Chinese yuan around the mark. And recently the Chinese yuan has been going up in value to 6.7 sort of thing. So yeah, to be honest, Central Bank of China has been doing a pretty good job in maintaining the currency peg, although China has a lot of liquidity on the market, right, in its own domestic market. So a lot of debt in this nation, and they can't really just have an open forex market. They can't have it. If they do, trillions of renminbi will be buying US dollar, right? And then people just change the renminbi to US dollar, including a lot of big companies. A lot of commercial companies, exporters, and they make money. They want to get into the US dollar, but they have a very limited amount of Chinese yuan that you can buy US dollar. I think it's around 35,000 US dollar annually. You can't get that amount, and anything over that amount you can't get out of China. So they're trying to maintain this kind of currency peg, and then so they limit personal remittance of the money. This way, the amount of the Chinese yuan wouldn't be able to get out of China, in a panic sellout situation, So yeah, they've been both countries, China and Japan, they've been defending their currencies, and especially Japan, they've been working very hard. I think for Japan, they're gonna Japanese central bank gonna reduce their balance sheet, and that means they're gonna sell out. They're gonna sell some of their bond, Japanese bond, onto the market. Therefore, they're gonna raise the bond yield for the Japanese bond yield, and then hopefully they can increase their own currency value. So that will happen, as I said. That's what Japanese central bank has been doing. They last month, I think they raised the interest rate by to 1%, and their central bankers, they said their main way to increase the borrowing cost of Japanese yen will be using the balance sheet rather than increase the interest rate. So I think that's what they're gonna do. At one point, the U.S. interest rate will fall. The new chairman of the U.S. Central Bank, the Federal Reserve, Kevin Walsh, I think at some point in the near future, the federal funds rate will be dropped, right? That will sooner or later it will happen, and the 10-year bond yield that will fall. At least this is the intention of the Trump administration, right? What they want is no interest rate. So that have to happen, by whatever means. If they can make it, and the Japanese will go up in bond yield. So what they're gonna happen, right? If both nations achieve their goals, and the yen carry trade will reverse, surely gonna reverse, because there's not much of of the money that you can make from this carry trade. Because imagine Japanese 10-year bond yield is 3% in return, and then US, let's say they have 3.5 to 4%, which is going to happen. You really don't have much money to make from that amount of interest rate difference. So, and you also have to risk the Japanese yen go up in value, right? So the traders, they will know it's very dangerous to do that, right? So it's very, very likely that, the carry trade will reverse, by some of the people, some of the traders that give up the carry trade before the interest rate come up to a narrowing point. So what point is that going to be? I'm not 100% sure, but based on this trend, based on this analysis, and it will happen in the next couple of years, right? At the moment, USD JPY is trading at 163. I personally think this is at the top. It could go a bit higher, could go to 165, can go to 167. I'm not 100% sure which point is the actual top, but the trend is gonna reverse in the next couple of years, but I'm not sure when. It could happen tomorrow, could happen next year, but I don't know. I've been very patient and to watch for the market, and I think the Japanese yen will go up in value. At that point, what will happen to the U.S. equity market and the real estate market in in Australia and in the U.S. I would say they're gonna have a huge crash. But how to determine a crash? I think the media says 20 to 30% of a correction will be called as a crash, and I think it is likely to happen in some places, at least in the US and Australia. I think it will be in a better situation, but US definitely a very dangerous place in terms of the tech stocks, and the real estate, So I think US definitely is a more dangerous place to invest compared to Australia. Simply because there's so much bubble in the US, particularly the tech stocks, the AI, these things going on. Too much money has been spent in AI industry and the stock performance hasn't been good in the last 2 weeks, so it has been 2 weeks fall, continuous fall in Nasdaq 100, so it's not a good sign, right? Because we've been there's a huge raising going on in terms of the AI investment, and it doesn't, the market has been dropping in value, for those magnificent seven, right? Those big stocks. I think last week Elon Musk lost $200 billion just in 1 week. So it doesn't look very good, and I think it's an ominous sign. I think some big money, smart money are kind of like getting out of this AI bubble in those smart money, big investors, they are pulling out, right, from Amazon, Tesla, Microsoft, Meta. Definitely, there has been a sign of they are pulling out. 2 weeks continuous fall in S&P 500, Nasdaq. So it's an ominous sign for a future fall. Definitely, the U.S. equity stock, equity market is has a huge bubble, but when the fall gonna happen, I think it will be after the Japanese yen carry trade. Yeah, I personally I believe that there might be a correction. Smart money selling out early. That will happen too. So last 2 weeks is a good example, right? Some money is escaping from the equity market, and because some people they know the carry trade gonna reverse sooner or later, you're gonna affect the U.S. equity market. So if that happens, why we not getting out of the market now? So that's what happened. I think some the big investors, they know this, that will happen, so they pull out some of their money out of the market, if not all of them. So yeah, when the yen carry trade actually reversed, the market will be having a huge problem, right? That will be much worse than the last 2 weeks. Will be much worse, right? Because majority of the people, majority of the investors, they don't know. They wait, they wait, and this U.S. equity market keep going up, and they get trapped when the market got sold out. They're not like smart money. They know what's going on, what will happen, months ahead, right? Typical ordinary investors, they don't know, and a lot of investment money is from your retirement fund, and it's actually not controlled by you. You have no idea your money is already in the U.S. market at the first place. It thinks in your superannuation fund, but it's actually not. I mean, it's there. It's get invested to the U.S. equity market. The Bitcoin, that sort of thing. So yeah, the Bitcoin is an example of the market lacks of liquidity, right? And it's just not enough of that much of the money, on the market at the moment. So the Bitcoin has dropped in value. I think literally halved, from its high. I think high point $130,000. Now it's trading at around about $65,000, just halved. So imagine if you bought the Bitcoin at $130,000 and now you lost half of your investment, right? Of course, some people trading in on the margin. Yeah, that's it will be an even worse situation. There will be definitely a margin call for many people. So that's an example of the trading of the Bitcoin. It's not like a straight line, not even higher lows. It's not like that. Sometimes it's just going up and then have a huge crash like Bitcoin, and then slowly picking up. But yeah, most of the people get into the market at the high point. At the low point, those are the smart money get into the money at the low point. At the point you don't know. Most ordinary people wouldn't have a clue. But they buy at the market lows where most people are. They don't know what's been happening. Anyway, this is today's analysis for the market. It's just a brief catch up. I'm not too. Yeah, it's 27th of July, so this is a date. So yeah, my last video said in August, housing market in Australia would be a drag, and I think that's gonna happen. I continue to hold the belief, and the market crash of U.S. equity market, that will happen at the point of the Japanese yen carry trade, which I forecast are gonna happen in the next couple of years. Yeah, but don't know when. But definitely, yeah, there'll be more than 20% of crash, and also real estate market in the US. Yeah, and I personally think the Australian real estate market would be a better bet than the US. Yeah, so that's my personal belief, and yeah, I think Australian real estate market has been really doing good in the last 6 years since COVID-19, and yeah, and I'll talk about why Australian market will be holding up value better than some other places, for example New Zealand and US, and I'll talk about it in the next videos. And for today, yeah, thanks for watching, and please like my video and share and subscribe. Catch up next time. Cheers, bye.